Hello guys, welcome back to my channel once again. Today this is CN on, now you're watching CN Great Councils and Forex Trades, and in today's video we're going to be talking about the rocket flow strategy. I got reactions, and of course I demanded for reactions and questions and suggestions on the kind of content you would want me to make now that we are fully back, and I got reactions to that effect. And one of the questions is whether the strategy works on PC and whether it works only on Boom 1000. No, the answer is no. It works on any trading instrument. Whatever trading instrument that you have, it can work on that trading instrument, right? So I'm just going to take you through how it works on other trading instruments, and this is trading view, and you really need trading view. Okay, now I understand that a lot of you trade with your mobile devices, but you need to learn how to trade, except if you don't have a PC or a laptop or whatever. You don't necessarily need it. Okay, your phone is enough, your mobile devices is enough, but you know, in case you want a larger view of the market, okay, and of course in a landscape manner, you might as well need a PC, and this is trading view. Okay, trading view offers you a lot of analysis tools, okay, analytical tools that you can use to analyze the market, and that's why I decided to make use of the trading view to show you guys a few things. So if you are new to this channel, don't hesitate to subscribe to this channel, because we've got a lot of contents to release to you guys now that we are back. I told you guys that we are back fully, right? And let's see how far we'll go in the next 6 months to 1 year. And I'm still demanding that you give me more suggestions on the kind of content you would want to be seeing on this channel. Okay, I've got a lot, and I'm going to be releasing them. Like I told you, I've got contents, personal content I'm going to be releasing, but then I would want to know the kind of strategies, be it indicator based, be it price action based, okay, whatever kind of, just leave it in the comment section, or you can contact me via email, send your suggestions, and we will see to that, right? So I told you guys I'll be releasing more contents on this particular strategy. This is one of the strategies you don't need to joke with, because it's extremely profitable, and all you just need is at least 2 trades in a day and you are good to go, right? And if you check all the pairs, there's no how you're not going to be seeing more than 2 trades per day, and this is almost like over 90% win rate, and of course the win volume is as high as well. Okay, so this is trading view, and there is a way you can customize your trading view. You know, normally Deriv trading view is not the same as the normal trading view for currency pairs, right? So you can just go to tradingview.deriv.com, and then you can access this. But aside accessing it like this, you can customize it. Now I'm going to show you that. Okay, I've already customized mine, but if you want me to make a separate video on that, showing you how to navigate the trading view, Deriv trading view, okay, then you let me know in the comment section below, and I will do it. I'll gladly do it. But in the meantime, there are secrets. I told you I'll be releasing videos that will tell you the secrets of this particular strategy, okay, and that's what I'm going to do right in this video. And after that, maybe we'll look at 1 or 2 pairs to show you how it played out, and to also authenticate those secrets. So to go to a layout that have been saved already, you just have to follow my cursor. You click here, you can see save. Now when I click here, you see load chart layout, and then when you click, you see now this is my brand name, CN Great Councils and Forex Trades. Is a customized layout for myself. Now when I click it, you're going to see that I've already set the strategy, okay, and it just loaded up, right? It just loaded up, and then I can continue with whatever I'm doing. So if you've not got the setting to that strategy, you can check the previous video I released few days ago and get the setting to this strategy, because we are not going to be showing the settings right now. Okay, the link to that video will be in the description box of this video. So we're just going to go straight into the secrets that you need to know. Okay, the other secret you need to know about this strategy. Number one is that this strategy works on any trading instrument. I said that earlier, and I also said it in the previous video. Be it stocks that you're trading, volatility, boom and crash, currency pairs, indices, it works on any trading pair, which is why you don't need to deal with this strategy. Now, secondly, it is better from 15 minutes time frame and above. 15 minutes time frame and above, right? You can trade with it on 5 minutes, 15, 30, but from 15 and above. And like I said in the last video, I said if you are taking your signal from 15 minutes time frame, then you are expected to stay a minimum of 1 hour on the trading chart. And I can assure you that 1 hour, almost over 100% of the time, you are going to be on profit till you exceed your trades, right? So that's secret number two. You can trade with it on any time frame, but it's better from 15 minutes time frame and above. Then number three, the least you can stay, of course I've said that already, on each trade is 1 hour. That is the least time you can stay. Okay, now this strategy also gives you a logical position to place your stop loss. I said that in that video. It gives you a logical position, and I'm going to demonstrate that in this video, right? And why it is logical to place your stop loss at the position that is going to offer you. Now, the next is that this strategy works on any account size. Okay, please stay tuned and get the last secret, because that's going to blow your mind, right? In fact, that is one of the most important secrets you need to know. So this strategy works and you can trade with it using any account size, but of course you must apply proper risk and money management. Okay, now the most important secret about the position of the moving average, this yellow color moving average you're seeing, right? The most important secret about its position, and of course its interaction with the Bollinger Bands, the BB. Okay, now that's what I'm going to tell you now. One, if the pullback happens, remember I talked about a pullback in the last video, and of course first and second video. Now if the pullback happens and the Bollinger Bands cuts the EMA, either ways, that is, if you are looking for buying opportunity, you are looking for the Bollinger Band to cut from down and then upwards, right? So if the pullback happens and the Bollinger Band cuts the EMA, either ways, do not take the trade. You have to observe. Now, if for instance this pullback, now this is a pullback, Bollinger Bands, the three lines of the Bollinger Band crossed the EMA upwards. Now if this pullback had happened and then it cuts the EMA, okay, just like in this situation now, though it didn't cut it completely, but it is just at it, right? Now the instruction says you are not supposed to take the trade. You wait and observe what the price is going to do. Okay, now the best trade is when the EMA is closer to the upper bands of the Bollinger Bands. I mean, yes, okay, let me repeat that again. The best trade is when the EMA is closer to the upper bands or lower bands of the Bollinger Bands, okay, which is offering a kind of resistance or support, as the case may be. Okay, that way you have a logical and better position to place your stop loss with minimal pips to manage your risk. Okay, and I'm going to be explaining that now. For instance, if you were to take this trade here now, Okay, now you see the Bollinger Bands, the three lines actually caught the EMA upwards, and then there was a pullback. Now if you were to take the trade here, this is where you were supposed to execute the trade, right? Now let me pick, this is for a long position. This should have been your N3. Okay, here should have been your N3, up a bit. Here should have been your N3, these points. Okay, now your stop loss, like I said, since you are looking for a buying opportunity, should be below, just below the moving average. Remember, this condition just said that the best trade is when the EMA is closer to the upper bands, okay, or lower bands of the Bollinger Band, offering resistance or support. Now, so this case now, it is the lower bands of the Bollinger Band. Now, you see the EMA very close to the lower bands of the Bollinger Band because you are looking for a buying opportunity. So you are placing your stop loss here, okay? Now, this is a logical position to place your stop loss because the lower line of the Bollinger Band and of course the moving average, okay, is offering a support to this price. Now, having crossed the moving average and it's going bullish, so now pulling back to the lower bands or lower line of the Bollinger Bands, okay, means that it's finding a support there. Now, why should you place your stop loss below the moving average? Just in case if it breaks the lower band of the Bollinger Band, the lower line of the Bollinger Band, and gets to the moving average, this moving average is still going to offer it a support. And if it eventually breaks it down and your stop loss is activated, that means the trade is completely going against you, okay? But it hardly happens. Of course, you see what happened there, okay? Price crossed here first, crossed the moving average, and of course the first upper line of the Bollinger Band and the middle line crossed it before the lower line of the Bollinger Band because you are looking out for a buying opportunity. Now, after the crossing, there was a pullback. Now, if you were to enter here, you see what later happened. Price never really came back to break the moving average downward. It's been on a bullish move up to this moment, okay? That is the power of this strategy. So I repeat again, the best trade is when the EMA is closer to the upper bands or lower bands of the Bollinger Band, as the case may be, offering resistance or support to price. That way you have a logical and better position to place your stop loss with minimal pips to manage your risk, okay? Now, the next secret you need to know is that when you are looking out for a buying opportunity, the best trades are those where price has been bearish, okay, in the previous sessions, and both the EMA and the Bollinger Bands being bearish as well, okay? That is appearing so steep downward following the previous sessions. I'm going to show you that in some other pairs that we're going to be looking at, okay? You just have to be very patient and understand how this strategy works so that you go ahead and make your money with it, right? So it's worth the time, even if it's how many minutes. Take your time, watch it over and over again. Now, if you don't want to go straight into trading with your real account, of course, it's always advised that you apply it to your demo, watch out how it works before you go live, okay? Backtest it, take trades on your demo, see the winning rate, see the magic before you go live, okay? Now, the point is this: price, the best trade is when price must have been, if you are looking out for a buying opportunity, price must have been on a bearish move with the Bollinger Bands and of course the moving average appearing so steep downwards, right? And in that case, in this scenario, you are going to be watching out for price reversal, which of course I explained in the previous video, which must happen with time. It's going to happen, but of course it's going to be with time. Okay, whenever you see price cross, that is both price and the Bollinger Band, cross the EMA upwards, okay, which must happen, like I said, then you should expect a pullback, which must also happen. That pullback must also happen. Okay, now maybe I should quickly go to, this is volatility 25 on 15 minutes time frame. Okay, now yes, of course price from here, from these points, okay, let's check some other pairs. Volatility 25 1s, 25 1s. Okay, and I want to show you exactly, yeah, 25 1x on let's check, it's here, but we can check 1 hour time frame. Okay, 1 hour time frame, right? So but this is going to be like selling opportunity. Okay, but whatever I say for selling, the opposite is the case for buying, right? So okay, let me start with, since this is giving us a selling opportunity, now like what I said in the other aspect, you just have to look for when price has been bullish. Price has been bullish. Okay, please don't get confused. From this point, price has been what? Bullish. Okay, with the moving average, look at the moving average, and of course the Bollinger Band appearing steeply upwards, making a bullish movement. Just take a look at it from here. Okay, this is what I'm talking about. Can you see it? Look at it. Right now, when this happens, I say that there must be a reversal. So you are just going to, because price cannot continue to move upwards forever, you are just going to be looking out and waiting patiently for price to reverse. And that price to reverse, okay, will come with the Bollinger Bands, okay, price first and foremost crossing the EMA 150, and of course the 3 lines of the Bollinger Band also crossing it. So I say that you should look out for that crossing. As soon as the crossing happens, then expect a pullback, which will happen with time. Okay, when the pullback happens, then if the pullback gets to the second line of the Bollinger Band, which is the middle line, and bounces off, you are taking your trade. Okay, which offers you a lesser high probability. But if it gets to the upper bands of the Bollinger Band this time, because you are looking now for a selling opportunity, then that's a high probability trade. Okay, either of the ways you can execute your trade. So what happened here now? Price went up from here, and then there was a reversal at this point and started coming down. Price crossed the moving average, and then the Bollinger Band crossed as well. Where was the point of crossing? Here. And then immediately there was a pullback. Okay, now even if you had missed this, okay, there was another pullback here. Okay, now assuming you were to take your trade here at this pullback, okay, this is where your understanding and knowledge of candlestick comes in, right? So now let's say you want to take a sell trade at this point, right? Now where did I say you should put your stop loss? You can see now that the moving average was very close to the upper line of the Bollinger Band. Now maybe I should remove this so that you understand. This is the upper line of the Bollinger Band right now. So, and this is the moving average, very, very close to it. And this offers you, okay, a logical position to place your stop loss, right? Remember what I said. Okay, now we put our shorts here, right? And then you drag this. I say it's gonna be just a little bit above the moving average, and of course the upper line of the Bollinger Band. And this, I mean, you can take your trade 1:1 ratio, 1:1.5, 1:2, 1:3. Of course you can trail your stop loss. Okay, look at how it played out. Then up till this moment, price is still going down. What happened? The crossing took place here. So this is like a gold mine strategy, and you don't have to joke with it. Right now, if you get scared, okay, remember I said this is 1 hour time frame. Now the least you can stay, okay, from 1 hour and above, okay, 1 hour, 2 hour, 2 hours time frame, 4 hours time frame daily. If you are taking your signal from this time frame and above, the least you can stay is 4 to 6 hours. But if you are taking your signal from 15 minutes to 30 minutes, then the least you can stay is 1 hour. So I mean, if you are taking your signal from 4 hours daily, you can stay days on the trade, days, and you are constantly in profit, right? So this is how this one played out. Now maybe we should check another pair. Let's look at volatility 50. I'm just showing you all this so that you know that it works on every pair, right? It works on every pair. Volatility 50, right? Okay, let's check 50. And on any time frame, like I said, okay, on any time frame, let's go to lower time frame and see how it played out there. Okay, let's know if we can see buying or selling opportunities. Okay, now this is a buying opportunity. Okay, now remember what I told you guys. Price has been on a bearish move from here, okay, from here to this point. Okay, it crossed here. Now there was a pullback. This did not give you a good entry. Why? There was a pullback. Price moved here. This is lower time frame. Okay, that's why I said it's better from 15 minutes time frame and above. Now price crossed here. The 3 lines of the Bollinger Band crossed the moving average here, and then it continued on a very strong bullish momentum. And of course the pullback happened, but it didn't get to the lower line of the Bollinger Band, not even the middle line of the Bollinger Band. So this wasn't really, though it continued going bullish, but it didn't give you a good entry. What happened here? Price eventually came here and the Bollinger Band crossed down, okay, now, and then gave us another opportunity. Remember that this happened and the lines of the Bollinger Band crossed back downward. Now it came to cross again and pulled back, giving us this opportunity of a better entry. Look at it. Price crossed, right, got to this point, then pulled back into our entry zone. Right now this was supposed to be your entry, and then you take your trade down, I mean up to that side. Yeah, so now where this is where we were supposed to get into the trade, this point right here, and then your stop loss is going to be just below this. Remember what I said, it's close to it, okay, just below the moving average. But in a situation where it is not very close to the moving average, I told you what you need to do, right? Assuming this was too far for you, you should have placed it just below the lower line of the Bollinger Band, and of course you look to your left to see if there's any resistance or support. And of course this is a kind of support level now. So when you place your stop loss here, you know that if price wants to come down further, it's going to be finding a support here, okay, which corresponds to this position. So you are taking your buy trade, and look at how it later played out. Okay, by this point you should have exited the trade. Now this is 5 minutes time frame. If you are to count the candlestick here from this point to this point, you should know that this is over 1 hour already that you're on this trade. Okay, now on 5 minutes time frame, you can stay up to an hour or less than an hour. Remember, I told you guys that the higher the time frame, the higher you are going to, the longer you're going to stay on the trade, and of course the more reliable. Okay, because lower time frames sometimes are dicey and very, very reactive, okay, to price movement. That is maybe we should check other crash or boom. Okay, remember this is trading view. Okay, so let's just know if we can check let's check crash 300. Okay, and from there we'll be saying goodbye for today. But if you are watching this video to this point and you are yet to subscribe, then you've not done well. You have to hit that subscribe button, and if you are finding any value on this video, from this video rather, then you give it a thumbs up. Don't forget to share with others as well who might want to use our strategies to make money. Also leave your comment in the comment section below and grant the request I placed. Right, so this is crash 500, and let's know if we crash 300. Let's check 15 minutes time frame. We are checking different time frames to show you how this strategy works on different time frame. Now here is another wonderful opportunity that happened, and up till now price refused to go down. Right now price has been on a bearish move. If you check up to this point, right, this is a bearish movement, as you can see. Okay, but let's check to be really sure. Yeah, from here you see this was a bearish move made by price. Okay, remember what I said about price in the previous session, having to be on a bearish move first, and this happened. Now a reversal happened. Remember, at this point, from that point to this point, price never really crossed. Yes, price must have crossed the moving average in some places, but the three Bollinger Band, the lines of the Bollinger Band, 3 of them never crossed. Okay, but at this point, both price and the lines of the Bollinger Bands crossed the moving average upwards. This was the point. And after that point, what happened? Okay, after this point, let me press my vertical line so that you will get the point. This was the point where everything crossed, okay, including the lower line of the Bollinger Band. And what happened? After the crossing, there was what? A pullback. Okay, there was a pullback. Okay, the pullback happened here. The pullback got to the lower line of the Bollinger Band. What happened next? Boom, it moved up. Now, even if you had mixed that opportunity, now a second pullback happened, and then still came back to the lower line of the Bollinger Band. Now, giving you higher highs and higher lows, signaling or telling you that this price has continued on a bullish move. So, and what happened again? It continued. Okay, continued giving you several opportunities, and up to this moment, price never came down to cut the moving average downwards. Right, it has been reacting and is still on a bullish move. Okay, this is how it works. Check on every pair. You only need 2 to 3 trades per day and you are good to go. Right, so now usually if price is going bullish, price is most times contained between the upper band of the Bollinger upper line of the Bollinger Band, okay, and the middle line. That is what you see here now. Usually price is contained between the upper line of the Bollinger Band and the middle line if price is going bullish. Right, okay, that's why I said in some cases price will, the pullback will get to the middle line, okay, of the Bollinger Band. Now the pullback you are looking out for is such that A, price pulls back to the middle line of the Bollinger Band. These are the two scenarios that you can take your trades, okay? Price pulls back to the middle line of the Bollinger Band, which offers you lower probability, but of course happens more often. You can still take such trades, like I said earlier. Okay, now the second scenario is where price pulls back to the lower band of the Bollinger Band. This was where that one happened, right? Here at this point. Okay, yeah, this was where it happened. It pulled back completely to the lower line of the Bollinger Bands, and here the same pullback happened to the lower line of the Bollinger Band, should in case you miss the first opportunity, right? Okay, here it pulled back to the lower line of the Bollinger Band, here it pulled back to the lower line of the Bollinger Band, all offering you high probability trade. So in either of these two conditions, okay, the three bands or three lines of the Bollinger Band must have also crossed the EMA above, which was what happened here. Okay, this was where it happened. It happened here, right? It happened here. The three lines crossed already. Okay, that's what you are looking out for. So in either of the two conditions, the three lines of the Bollinger Band must have also crossed the EMA above before any of the pullback. It happened before any of this pullback. Look at the point it happened before any of this pullback. Okay, now your trade should be executed at the bounce off of the pullback, okay, from the lower line of the Bollinger Band, if you are looking out for buying opportunity. Why the reverse of what I just said now is the case if you are looking out for selling opportunity. So if the EMA is close enough, okay, which in most cases is when the bounce off is found or is from the lower line of the Bollinger Band for buying opportunity, then if that happens, okay, you have to set your stop loss. I repeat that again, because I said that one of the key secrets of this strategy is that it offers you a reasonable and of course a rational, a logical position to place your stop loss. So if that happens, okay, you have to place your stop loss below the EMA. So if you had entered here or here, okay, your stop loss would have been here below the moving average, because at that point the moving average was here, so your stop loss would have been somewhere here, right? Okay, now that's what I'm going to say. However, if the EMA is not very close, irrespective of the line, okay, where the pullback happened, if it's not very close, then your stop loss should be set just below a previous swing low, okay, a previous swing low, assuming the moving average was not here at this point, assuming the moving average was very far from here, then your stop loss would have been the immediate previous swing low, which is here, okay, which is here, right? Which is here. Now, assuming you met the price here and you were to enter this trade here and your moving average was maybe somewhere here, you see that it's very far, okay, that will not give you a logical place to place your stop loss. So I said you look to your left and then you place your stop loss just below the very recent swing low, which is here, and we are good to go. So guys, if you were to take this trade, okay, if you had to take this trade, you would have been in profit even up to this very moment. Now I'm using PC, and of course some of these trades are running already on my mobile device, right? So if you had to take this, you would have taken maybe somewhere here, and then you adjust your stop loss, okay, and you can ride it on, till wherever, and you are good to go. So many thanks for watching this video to this point, and please do not forget to hit that subscribe button down below, turn on your notifications so that whenever I upload a new content you get notified. Okay, I told you guys I am back, and we mean business this time, okay? So don't forget to let me know in the comment section below I've gotten suggestions on the kind of videos you would want to have, okay, in addition to my the strategies and of course the contents I planned releasing already. So let me know in the comment section below. I still need more of your suggestions, right? Because we are in for trades and it's gonna be hot this time. Don't also forget to give this video a thumbs up if you have found any value in it, and share the video, and I'll be talking to you in my next video. This is CN Great Councils signing out for today. Bye.